Hi, this is Zak Mir of zakstay.com with a technical week ahead for November 4th to 8th. And I'm starting off with Associated British Foods, where we've got a runaway move to the upside. The shares have been within a rising trend channel since the beginning of the year, and they've been very firm in the recent past anyway. It's not surprising given that they own Primark, and it's been one of the biggest retail successes of the past decade. I mean, the IKEA of high street shopping, I would say. The current situation on a technical basis is that we've had the RSI stretching to 90 plus out of 100, which is some going for a FTSE 100 stock, and also an unfilled gap to the upside for October, taking the shares to where they have been towards £23. In fact, while we might expect the shares to cool off over the next week, obviously ahead of the latest update, it really does look as though above the 10-day moving average, which is now £21.56, we could still head up to £25 as a best case scenario over the course of November. At this stage, only an end of day close back below the 10-day line would really suggest that we're going down for any sustained period. Obviously, we've got old resistance from May around the £20, £21 level as well, so that would come as support in the first instance. But really, the surprise here has been the strength of the move, and it is almost as if the market's anticipating something rather big here, such as the IPO of Primark or something similar to that. So, incredible move there. Staying in the high street, we've got Marks and Spencer's, where we've had Dunelm stake building. I think 3% is a stake which was announced. So maybe somebody else is trying to go in there other than Philip Green, who was a previous possible bidder. Rising trend channel here, heading for £5.80 on Marks and Spencer. There's been an unfilled gap to the upside during October. The floor of the gap is at £4.86. There was a gap through the 50-day moving average at £4.90. So this situation looks powerful as a buy situation, even though we've had a little knockback bull trap through the last the last October resistance. So the target here really above 486, we've got up to £5.70, £5.80. Any dips towards £4, the £4.80 zone, £4.80.90 could be buying opportunities, with only back below, say, £4.80 on a weekly close basis, really starting to slow the situation down. But very positive there for Marks and Spencers, and looking for a little more on the upside. Taking to the skies, we've got International Consolidated Airways, or Airlines, in fact. Here we've got a situation where there has been a very strong price action in the recent past. Rising trend channel based at and above the 50-day moving average at £3.30. Currently, the floor of the channel's at the 20-day moving average at £3.48. So we have an opportunity to go long there for a target as high as £3.80, the top of the August price channel. Also, RSI support line there, double tested over the past week. If you're cautious, you'd wait for an end-of-day close above the 10-day moving average at £3.55 as the buy trigger before you look for £3.80. But this is looking solid, and a continuation of an extended 2013 bull run looks to be on the cards here. Now on to ENRC, Eurasian Natural Resources. And one of the most difficult charting situations of the year, I would suggest. Obviously, the shares have been down most of the time, or in terms of the breakdown below the 200-day moving average at £2.60, and currently struggling at the 50-day moving average at £2.20. But we have had sharp spikes to the upside. There was takeover interest as well. So really, traders here have had everything thrown at them. Current situation, probably after the late October bull trap up to £2.30, you'd probably be looking to the downside, at least while there's no end of day close back above that level. And the obvious thing to do would be to see if there is a test of 200 pence zone support from earlier this year, from June and also in April, over the next few weeks. There is the risk of a breakdown below that zone. Probably we could say something like the floor of a price channel drawn like this, say towards £1.50 or even lower. But at this stage, we're looking for £2, well below £2.30. I'm finishing off with Aviva, which has been in one of the recovery situations of the year as well. Has improved certainly since Eurozone fears died down, obviously with the recovery in the FTSE as well. Technically, it's been a fantastic situation too. A golden cross buy signal around the £3.70 level in July. Never really good look back since then. Had a unfilled gap to the upside, bounce off the 50-day moving average, announced at £4.16, a couple of bounces in fact, and now we're making progress within a rising August price channel based around the 20-day moving average at £4.34. That's the end of day close stop loss, and we're looking for a target as high as £4.90 over the next few weeks, providing obviously the latest update doesn't hand out any nasty surprises. That's it for me. See you again next week.